now you get 100% of the risk. No, right? The profit is the benefit piece. And so for us, it's as if we're gifting it to you. Whereas on the risk side, if we're 50-50, we need to then share in that risk. Lo samhallah, something happens to the home, right?
Yeah.
And there's extenuating circumstances and a lot of detail that goes into that. So on the profit side, it's a profit forgiveness. You get all of it. But on the risk side, that's not the case.
That's awesome. That's awesome. So I wish more people understood that. A lot of people will say, this is basically. They'll criticize Islamic financing products and mortgages and say, this is basically interest. They're charging the same rate, profit rate, and it's just going through a different, more creative structure or loophole in the Sharia, and they're basically doing the same thing as the bank, but it's more expensive overall.
Mm-hmm.
Might as well go to the bank. And I've spoken to a lot of people that have said that. And I'm like, no, it's not like that. Have you actually read what the structure is, murabaha, musharaka? They're like, yeah, but basically you're doing the same thing.
Yeah.
So what do you say to people like that?
100%, and I want to talk about pricing, why it's more expensive too, right?
Yeah.
But for those that say, we're just changing the words interest to profit, right?
Yeah, exactly.
Or, this is just, as they say, lipstick on a pig, right? It's not, because, I could say the same thing about halal meat, right? Why do we have the halal stamp when it comes to meat or certain types of foods? We know that the process is different, right? We know that animal was slaughtered in a humane way. The blood was drained. There's an imam or a sheikh or somebody that recited, Bismillah ar-Rahman ar-Rahim on the animal before it was cut. And Islamic finance is no different. If we went to a restaurant and we were served halal steak and a non-halal steak, we wouldn't be able to tell which one is which, right? They said, oh, guess which one. I don't know, right? But if they said, this is halal, and I said, why? They'll say, well, the process is different, right? And Islamic finance is no different, right? The process and the documentation is different, even though the outcome is the same, right? And so if we look at an apples to apples comparison of, 5% interest here, 5% profit here under musharaka or murabaha, what is the monthly payment? Okay, $2,000 a month here, $2,000 a month there. Okay, what is the end total, cost? It's the same. And then they're going to say, well, what's the difference? They say, well, under murabaha, we have to buy the asset, then we resell it to you. Under musharaka, we partner with you on the asset. And the number one thing, this is where the education comes into play. If you as a Muslim don't understand the concept of riba, which is money on money, right? Then all of this stuff that we're talking about, you're not going to agree with, right? Like all of that goes out the door, because as a financial institution, Islamic financial institution, we don't actually lend any money when you think about it.
That's right.
Right? We are in the business of trading, right? وَحَلَّلَ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَى, right? And bay' in Arabic is translated to trade. And so what are we trading? We're trading assets. We're buying assets and reselling them to you, or we're partnering in assets. And so that's the difference. We've never actually given you money and said, give us more money back. And that is essentially the main principle or tenet in a contract between you and the bank, right? And I'll give you another example. If I have a phone store and you come to me and you say, hey, brother, what's the latest phone? I say, okay, iPhone 15. You say, how much is it? I said, it's $1,000 cash. You say, well, I don't have $1,000, right? Today, in this world, you could go to a bank. They'll give you $1,000, right? Which you then would bring to me and pay me. But what happened, you still have a contract between you and the bank that says, I need you to make $100 a month installment for the next 12 months. So what's your cost? Your total payments are $1,200, right? The phone costs $1,000. So now there's $200 there of interest, right? Which is 20%.
Yep.
If you came to me and said, okay, brother, I don't have the cash. Is there another way to do this? I could say, yeah, we could do a murabaha-based agreement, right? I own the asset. I already own the phone. I'll sell it to you in it for the convenience of installments for $100 a month. What are you paying? $1,200 in total. $200 is now what? Profit. It's not interest. I didn't give you any money. I just gave you a phone and I said, pay me back $100 a month. But it's not going to cost you $1,000. It's going to cost you $1,200.
So the difference would then be if you pay now, you pay the cheaper price. If you pay later or over a term, then you pay the regular price or the price with increased profit.
Exactly, right? And that's it's a convenience fee for being able to pay in installments. But you still get full use of the phone, right? You get the phone today.
So what happens? This is something that maybe affects especially in regular mortgages, conventional mortgages, where somebody can't pay for some period of time, and then so that keeps getting added onto their principal, and then the banks don't care. They're making more money. You can take longer to pay. Right now, a lot of people I know are in like forever mortgages or like 40, 50, 80, 90 years.
Yep.
I know some people at work even that are, they're in like forever mortgages. They're only paying back a tiny sliver every month, and most of it is just interest. And sometimes they can't make sufficient payments to even cover the interest.
Yep.
But in this kind of, especially in this market where, affordability crisis is a big thing, how would that work if somebody lost their job or they're not able to pay for some time, or if they came and asked, can I get a month, 2 months, 3 months, 6 months break from mortgage payments?
It is a very good question because it was brought up yesterday, actually, on another podcast that I had with an MP, because he was arguing, right? Well, what's the difference? It sounds the same, right? In terms of risk, like as a bank. And I said, no. I said, this is exactly the difference, right? Because we saw it in COVID, right? This whole payment relief, okay? So if somebody could say, I can't pay, right? And before COVID, they'd be like, oh, you've defaulted, right? Interest is compounding. It's still accruing daily, even though you can't pay it. And then by the time you sell your home, who knows how long it takes? Maybe there's nothing left in equity that you end up getting because it all went to the bank. Legal fees, admin fees, this fee, that fee, whatever, right? During COVID, they said, you know what? If you want payment relief, we'll give it to you. I said, okay, that's good.